Okay, hi everyone, hello. I'm Batu, I'll be the host today. Thanks so much for all joining the FinTech Pitch Night today, organized by the Startup Club. As a Startup Club, this is what we do. We organize industry-specific pitch night and investment conferences to connect entrepreneurs and investors. I will just briefly talk about the formats and introduce the judges, then we will directly move to the first pitch. So we invited seven promising fintech startups that are actively raising. Each of them will do a 5-minute pitch, followed by 7-8-minute discussion with the advisory panel members. We got companies focusing in different areas like digital banking, platform for wealth manager, app for financial plans, insurance, and bringing financial product to the market. So we hope and believe that it will be super interesting for everyone here to discover these companies. And as mentioned, we got 5 panelists from reputable VC firms like Connecticut Innovation, Octopus Ventures, Venture Partners, Precursor Ventures, and Frog Capital. I will ask the judges to shortly introduce themselves. So Douglas, are you there? Could you please introduce yourself?
Sure, thank you. Happy to be here. Looking forward to hearing the pitches. I'm with CI Ventures. We're an early stage venture capital firm. We invest, half the team invests in the life sciences. The other half of the team that I'm a part of, we invest in tech broadly, including FinTech, InsurTech, as well as the many other industry verticals. So look forward to hearing the pitches. Thank you.
Great, thanks so much, Douglas. Great to have you here. And now Rennie, are you there?
Yes, I'm here. Thank you so much for the introduction. Hi, everyone. I'm Renee. I am one of the FinTech investors at Octopus Ventures. So we are one of the larger pan-European funds, primarily headquartered in the UK, but with a base in Berlin and in the US. We invest in truly the full life cycle, so all the way from pre-seed until growth. Now for the pre-seed fund, that is a slightly separate strategy, and they are usually they're follow-on investors. They do 100K ticket sizes. For the fund that I sit in is between seed and Series B, and we invest between 1 and 10 million. That's in GBP, of course. And then we also have a growth fund, but that one's primarily held for our portfolio companies. And as you can see, by default, we'll do our follow-on investments, which in this current economic climate is very important for you to know that your investors are able to do that. And finally, aside from FinTech, which is the vertical that I focus on primarily, Octopus Ventures also invests in B2B SaaS, in healthcare, consumer, and deep tech. So yeah, really looking forward to all the pitches for the rest of the evening.
Awesome. Thanks so much. Jim, are you there? Could you introduce yourself? Jim from Venture Partners will be with us today. I'm not sure, maybe he's not able to unmute yourself. I don't know. Okay, Ayana, are you there?
Hi, how are you? Well, good evening and good morning where I'm at. My name is Ayana Karrison. I'm at Precursor Ventures. We are a early stage venture fund based in San Francisco. So we mainly invest in pre-seed and seed stage companies. We're a generalist fund. So just about every sector with the exception of life sciences. I would say our top 5 tend to fall into consumer, B2B SaaS, FinTech, marketplaces, and digital health. And we're open to just about every other sector. I've been with the firm for roughly 4 years, and we invest up to 500K. Nice to meet you all. I'm excited to hear the pitches.
Great. Thanks so much, Anne.
Checking if you can hear me now regarding the mic.
Yes, we can hear you now.
Yes, how was there? Sorry for the small trouble. Guillaume from Venture Partners, so based in Paris, France. We're a French VC fund that's been operating for the past 25 years. Today, it's 1 billion euro under management for 4 investment verticals. The life sciences, focusing on everything regarding biotech, healthcare, and nutrition. Two new funds that were launched in the last few years, one on sports and well-being, the other one being focused on an initiative more towards the environment, being the blue economy, so treatment of water, preservation of oceans. And I'm part of the tech and digital team that is mostly focusing on fintech and retail innovation. So more than happy to join this pitch night with the focus on the fintech segment that we've been covering for the past 10 years, and a lot of investment in that space, mainly in France and Germany, but also throughout the rest of Europe at Series A stage. So happy to hear about the companies and discuss the project.
Great, thanks so much. Thank you for being here today. Konstantin, could you please introduce yourself as well?
Hey guys, Konstantin here. I'm a principal for Frog Capital. We are we call ourselves scale-up investor. Probably falls into the Series B category. Companies, 3 to 10 million of ARR, and we write 5 to 15 million checks to help them scale their operations and also support them with an operational platform team. Pretty industry agnostic, but fintech is definitely one of the verticals we focus on. So we've done, for example, last year an investment into Modular with General Atlantic, as well as just recently sold Asimo. But excited to be here and listen to everyone's pitches.
Great, thanks so much. Thank you for all the judges for their contribution. We really value that. So yeah, let's get started with the first pitch. The first company I will be presenting is Greengage. Sean, CEO of the company, will do the presentation. Sean, are you here?
Yes, I'm here.
Feel free to share your screen and start the presentation.
Great, thank you. Excellent. I can't do the screen share, so I'll just speak. So my name is Sean Kieran. I'm the CEO and founder of Greengage, which is a digital merchant banking startup. We are in the UK, so I'm located in London. And what we offer is essentially a Coutts Revolut hybrid, if you will. So we have the full digital backend of an app, web services for primarily corporate clients, but with every client having a dedicated relationship manager. And our edge is that we don't have just personal service, we're also crypto friendly. So we've invested a lot of money into understanding the flows of particularly crypto risks. Half of our clients, we're live, are in the crypto space. For e-money banking services, we offer, and Konstantin mentioned Modular, we built on the Modular platform for offering GBP and Euro accounts in terms of payments and cards. And that is a Revolut style service, but in what we offer, we give them a fairly cost competitive account opening fee and then servicing fee at $5,000 a year. And we're signing up, we're about 50 clients now for that, we just launched this year. And that, and what we call it digital merchant banking, is married with a lending platform where we surface more for our broader client set, lending opportunities across traditional and digital. So the traditional sources of money are credit funds, family offices that we have relationships with, and the digital are more crypto native, where we can also surface crypto-backed lending, for example, into fiat or digital commercial paper. And we've done several hundred million of volume of lending on that vertical. And that we charge roughly 50 bips on. So it's a facilitation fee. And the third vertical is a SaaS platform where we have a suite of apps. We've built everything on Salesforce, our own core banking stack, basically. So we don't need to invest in a member. We've done this our own. And we've sold to quite a few financial services firms our own tech on a SaaS basis. Last year, we made over $1 million of revenue. This year, we're looking on track to make over 3 million now that we've launched the e-money banking services. The pain point we see for our clients is that, particularly since the US had issues in the crypto banks all going bust, a lot of firms that offer crypto-friendly banking services that have done so on their balance sheet haven't clocked that crypto companies are not really sticky depositors. We've seen that with Silicon Valley Bank and Credit Suisse. And what we're trying to offer is essentially a Web3 banking model. So I'm quite keen on e-money and progressing that build up with clients. About 50% of our clients on that e-money vertical are not in the crypto space because we do fully digital account opening also for trust structures, fiduciary vehicles, foundations, and we can open in roughly 2 weeks, which is a game changer for most of these that take up to 6 months. In combination with that, the lending platform is scaling as we see tokenization as a big trend. And so some of our clients are looking to tokenize digital debt, for example, and we see commercial paper as a gateway product for that. So we're already looking at doing some of these transactions. So as we try to disaggregate the idea of not being a fully fledged bank, but doing e-money, transactional services, payments and cards, plus a lending platform, it doesn't necessarily need to be our balance sheet to deliver this for our clients, but we're working as a plugin to API services. We're looking at having probably 500 clients by end of the year. 500 clients is roughly when we break even, because we've built on a pretty lean base. There's 35 people on the team, primarily techies, all UK based except one in Spain. I'm sorry I can't share the deck for some reason, but if any questions, I can kind of kick off there.
Hey, Sean,
Yeah,
thank you.
sure. Thank you for the great presentation. Yeah, Ian, please go ahead with your questions.
Thank you. Great presentation, Sean. I'm curious if you can talk a little bit more about your KYC/anti-money laundering process.
Yeah, of course. So I mentioned we built everything on Salesforce, but that allows us to plug in via API to third-party partners. So for our KYC, we have quite a few AI kind of based tools. So Comply Advantage is one, the founder of which is one of our investors. We have raised now 7 million today. We've just raised 1 million with some of our investors following through, which was announced today. We have GBG and Bureau van Dijk also plugged in, and for coin forensics, we use a firm called Merkle Science. On our SaaS vertical, we're actually building a coin forensics aggregator app for red, amber, green indicators across these different platforms for more user-friendly indications. So we want to be a bridge between the crypto and fiat worlds. I haven't given my background, apologies, I should have kind of done that from the outset, but I'm a banker by background. I built a bank within Credit Suisse here in the UK. I moved from Switzerland to the UK to do that in 2010. And most recently, before setting up Greengage, I was the CEO of the London office of the first bank in the world to do crypto-friendly banking. So I was at a Swiss private bank.
Awesome, thank you. Good to meet a fellow CSer.
Maybe a quick question. Thank you, Sean. Very interesting. Can you tell us a bit more about the other services you can provide to those customers regarding fiat and cryptocurrencies?
So we should shortly get the FCA crypto asset registration. So in the UK, you need that to be able to offer crypto native services, excluding in lending. So we have in writing from the FCA, we can facilitate wholesale crypto lending because B2B lending is out of scope. And that's where we've been making a lot of money. We've made about 6 million to date or since inception. Last year was a little bit of a drop because crypto lending didn't have as many loans, given that the Bitcoin price dropped so much. But it was a great revenue generator in the first year. What we're seeing in terms of the demand from our clients is more the on and off ramps. There are a few e-money firms operating in this space, but our price point is much lower, and we've done that very consciously. At 5K a year, this is typically what some other firms charge monthly for similar services. And what we wanted to do is build relationships long-term with what I call the base of the pyramid. So firms that are building technology solutions, a lot of family offices have some crypto exposure and they still need on and off ramps. So we're actually having lots of solicitors and accountants send us business for the family offices that they work with. And we think 5K a year is actually a meaningful fee for them. And it's that kind of approach. We're working with partners, and a lot of us are coming from financial services backgrounds. Our head of compliance, and I know you're based in France, was the lady who set up Binance in France. She was their head of compliance. Lynn McConnell is a friend of mine. She's joined us recently.
Okay, thank you so much, Sean.
Hey, Sean, thanks for the presentation. I have two in one questions, and you might actually answer them both with the same answer. But what is the biggest problem you're trying to solve for your customers, and what is the no-brainer of them using your solution?
So we're not going to be a solution for everyone. And I like to say that the challenger banks and a lot of the fintechs, so 99%, if not more, of what clients need, we're very happy being the rest of the 1%. So our clients are typically unusual. they're higher value added services, or maybe they have some structure that doesn't fit the mold. And why I said trust structures is a good example. As soon as you have a director from another jurisdiction or a source of wealth, which is a bit unusual and doesn't neatly fit into a tick box approach, that's where we come in. And that's why our clients want to pay for a human being, because we can then understand them, invest in the relationship and build something long term. Why I'm keen on doing that is that's my background. I get relationship services. And that's why I say Coutts Revolut is kind of the best proxy of what we're trying to do. And I think Coutts is a great example of what could have been something that, unfortunately, I think they've lost their way a bit being part of RBS. But by having that long-term and understanding of a client, the reason I'm super keen on having this lending platform sit next to the relationship and the transactional data that we have on the payment side is that the value add for our clients is getting, in a Web3 world, products and services from the open market. And if we have those relationships and the data, and we can mine that, we can then surface things for them on the lending side. And we don't have to have our own lending. We can work with partners and just make it a fee. Down the road, I would love to have probably a ring-fenced bank that we can price some of these credit instruments. As tokenization takes off, it's not there yet. This is still years away. But the likes of pricing a commercial paper instrument for an SME, I see us eventually becoming a fully fledged SME investment bank. But for now, we're working in the crypto space. It's a great environment for us to build our services and get good fees.
Thank you.
Thanks, Sean. I have a quick question around maybe the different verticals and maybe the kind of revenue split among them, or which one started first and the evolution of the three and how does it look today?
Yeah, so I will try to screen share again because there's one slide that covers this, but I'm having some issues. I'll just talk to it. So the last year was over 1 million of revenue, about 50-50 from our SaaS tech vertical and from the lending platform. This year, we're looking at adding, as I mentioned, the e-money banking services now live and generating revenues. We're aiming at 3 million of total revenues this year. And we're thinking that the e-money is going to be the takeoff. And that's the gateway really for the relationships that we have that will start to funnel the SaaS products that we're bringing to market, and also then the lending platform. So initially, it's going to be 2/3 to 1/3 because we're getting a lot of interest from clients that are not getting served from traditional banking services providers. But we do see a potential in kind of years 2 and 3 for our SaaS platform to start being sold in entirety, because we have effectively an nCino style model, because there is a Salesforce native core banking stack in the market, but nCino doesn't have the Mambu end of it. And there are providers that I think Mambu is great, nCino is great, but sometimes they do not fit, particularly the wealth banks, which is again our industry. People that have been sold bulge bracket solutions, the Avalox, etc., that don't necessarily fit what they need. So we are building that up, but it's not. I'm not going to say we're going to be a fully fledged SaaS business, but we're used to hustling because I've had to make revenue to survive. For full disclosure, we've never taken VC money yet, so it's primarily been driven by revenues and strategic investors and high net worths.
Is that how you see your defensibility as a platform versus someone who maybe could build it themselves using a mixture of modular nCino, Mambu? For you guys, it's like that what you just mentioned is sort of the differentiator, let's say.
I think there's 3 differentiators for us. I think in a Web3 banking world, it's going to come down to relationships and transactional data, which is why we try to sit at the front and getting to know people and building those. We have a database, because we've been operating for long enough, of 5,000 relationships that know us. We've had some contact with them. We're now opening accounts for them as we speak. I think our price point can be that much lower because we haven't outsourced the tech. We've been very cautious in choosing suppliers that we can build long-term relationships with. And if we were to have gone down a fully outsourced tech model, we couldn't offer it at $5,000 a pop with a relationship managed service. And that would mean that we would eventually lose business to somebody else that could.
Got it.
You touched on the pullback as a result of kind of the FTX and some of the other troubles in the States. What about central bank digital currencies? Do you see that as a net positive, net negative, or neutral to your business model?
On the whole, I think it's quite positive because it's, again, a gateway. So as we see digitization happening, I think it's inevitable in financial services. There will be efficiencies that are achieved through the likes of CBDCs or stablecoins. I mean, there's some pros and cons in the way that they're designed, and I don't want to go into that for this discussion. But from our perspective, if the payment rails become more efficient, which they have to. I mean, we've seen Fed now in the US and Europe are kind of evolving with what Mika's unfolded with stablecoins. Firms that can facilitate these types of transactions, I think open banking is the way of the future, and open finance increasingly. But people haven't connected that Web3 and open finance need the likes of digitized payment rails to take off. So we're fully ready for that, and that's why we built again our own systems to be able to plug into real-time payments networks.
Yeah, thanks so much, Sean. Thank you for the great question and great answer. Now the time is up actually, so we will move to the second page. Thanks so much, Sean.
Thank you.
Thanks, Sean.
Thank you. So the next page, next company is Solid World. Stanver, CEO of the company, will do the presentation. Stanver, please feel free to share your screen and start the presentation when you are ready.
Sure. Thank you so much.
Absolutely.
All right. You can see it?
Yeah.
Perfect. So,
yes.
Hey, everybody. I'm CEO of Solid World. I've been in venture-backed tech businesses for a decade. I was early on in Glia, which is a New York-based enterprise SaaS business that's now a unicorn. I was also founder of eAgronom, leading climate tech company in Central Eastern Europe. Been part of Estonian Founders Society with Tave+10. It's $1 billion family office in Estonia, and so on. My co-founder, he's done a lot of open source contributions in the carbon markets. He's been featured in T.I.M.E as on-chain carbon thought leader. And his history is in, like, most of the carbon information that's out there. A lot of it is thanks to the Jupyter notebooks that my co-founders created, basically. So yeah, what we want to solve is the issue that the carbon markets currently are like a medieval bartering economy. There's no liquidity there, there's no transparency, and it's all over the counter trading. Especially when we get to forward financing. This is to get these early on projects off the ground. All the deals are done behind closed doors. It holds back suppliers who are having difficulties accessing financing in the amounts that they need. And it holds back investors because, like, the markets are so hard to understand. So the deeper they get, the more questions they get. And JP Morgan told us they want to deploy $10 trillion to green finance. They'd like carbon to be part of that, but currently they just don't understand it enough. So we're changing that, and we're changing it by bringing commodity infrastructure to the project financing. We have our own risk framework, which is carbon risk identification scoring principles. It's the world's first framework for assessing delivery risks of the credits. We assess all the different aspects of the climate risk, credit risk, so on and so forth. And then how we essentially function is we buy carbon credits ahead of time, these forwards at transparent market prices, at discounts, and then we offer inventory to distributors like brokers, traders, marketplaces who can sell it away for a spread to their clients. And so they can basically treat us like a book that they can always access at transparent prices and full disclosure of what's inside them, but they don't need to hold the risk. And in the middle, we democratize access to these financing opportunities, and people can go there and hold their capital there, earn like 13.6% APR while creating liquid market in the middle. So we started with carbon. We just recently launched our first mangrove restoration pool. We got 1 million TVL deployed, but in the soon we want to cover all the carbon assets, but then go into other climate assets as well. So carbon is just the start. And we want to get into commodity markets, project financing, all the stuff like that. And when you look at like primarily voluntary carbon market, nature-based funding and project financing, these are huge markets expected to really explode by the end of the decade, especially due to the growing climate crisis. And this commodity infrastructure is also a base layer financial primitive on which you can build derivatives, bonds, NFTs, DeFi applications. So we're already working with a couple of ecosystem partners to do those collaborations. I already talked about our team. We're well backed by tier 1 funds like Greycroft, Ave+10. We got great advisors, and we're looking to start our seed round later this year. And yeah, we're also live. So you can go to our site, you can launch our app, and you can check out and play around with our pools ourselves, or you can go through all the projects that we have, even see the underlying contracts that we signed with our suppliers. So it's like an incredibly transparent approach. But thank you. That's it for my quick overview.
Thank you, Stanmore. Great presentation. Douglas, would you like to start with your comments? Do you have any questions?
Sure. Yeah, just a quick question. One of the challenges, particularly with carbon markets, but generally with forward purchases, is the risk of non-delivery. How are you addressing that, and have you considered kind of an insurance angle on offering insurance against non-delivery?
Excellent question. This is exactly what I mentioned before about the GRIS framework. So you can go to our site and see the GRIS framework right here, and you can open it up and read about it at the deep level, how it all works. But this is the world's first framework for assessing delivery risk. And we use a bunch of AI tools and other stuff in here to assess carbon yields, climate policy, financial risk, all these things. And getting into insurance, yes, actually insurance companies are adopting this framework already. There's 3 who are, they said they've never seen anything as advanced out there so far. And we put this framework out there as a public good, free of charge for everybody, because we want this to become the industry standard for doing the due diligence on the projects. So how it works, if a project comes to us, we do the GRIS framework analysis on them and essentially stack the ratings. Our pools only accept A to AAA rated credits. We don't accept any credits that are unlikely to be delivered. And once we sign agreement, the suppliers also need to provide us guaranteed delivery, which means that if a project, let's say forest burns down, they need to provide replacement credits, which also are accepted by the pool, or buy back their position from the pool. And on top of that, we only sign agreements with entities that are in US or EU. So we don't sign with suppliers who don't have a substantial presence in strongly regulated frameworks. We do want to get insured as well. So you're absolutely right about that. And well, basically name an insurance company that's in that space, and we're probably already talking with them. So yeah.
Probably follow up on that, and maybe one of them might be Kita that you've been speaking with, which is one of our investments standard. They do carbon credit insurance, but if not, happy to put you in touch on the site. My question is,
I think your fund is making great choices.
Good to hear. How do you actually find your carbon credits? So you mentioned a couple of suppliers, but how reliable are they? And yeah, how are you going about it?
So one of our suppliers is Alcott, who's one of the oldest carbon project developers, Blinder, one of the biggest mangrove developers. We also have, for our follow-up pools, we also, like the first pool we launched is Verra Mangrove Restoration Power Pool. We also want to do gold standard cook stoves, Verra community reforestation, not probably commercial reforestation, biochar, so on and so forth. So we'll do like these narrow banded liquidity pools with different registries and different methodologies. And the suppliers, well, honestly, they come through the networks. The industry has, we don't talk with suppliers who have no experience. You must at least have BDD registered in order to even come to talk with us. But if you're an experienced developer, you can also come and start talking with us at planting stage. So when you have started planting, but it really depends on your experience level. And we don't centralize completely the decision-making what comes to the pool. The seven biggest liquidity providers in the pool who make this market work, we call them the 7 guardians. They get privately hands on all this due diligence and risk reports that we're grading for them, and they can veto any project trying to access the pools. So this really ensures that the quality of the pool stays at a certain level, because the liquidity providers have skin in the game. So it's in their interest to make sure that the pool's quality doesn't become lower by letting lower quality projects in the pool. Like the first suppliers we have, they are like very adamant about making sure that at least 50% of the proceeds of the projects are redistributed back to the local stakeholders. So like these quality barriers are achieved through this curation process. And yeah, we already got follow-up suppliers as well, like Star CB, for example, has done their commitments on different projects, and there's a couple of other trading houses who I can't mention right now, but we have a very well-established reputation among the trading houses in the industry, so they often come to us.
Thank you.
Thank you, Renee. Guillaume, would you like to continue? Do you have any question, comment?
Yeah, thank you very much about the insights on the last question, and that brings me back to the, let's say, acquisition strategy that you need to operate on one side on the sourcing of carbon, and then you, of course, you have all the others coming to trade. Can you elaborate a bit more on this?
Yeah, so it's actually very different from what we've seen. So what we do is we put the price on the market 24/7 with our pool. So these are buying prices that are on the market 24/7. And you can see exactly, like, depending on how much volumes you buy, depending on how much further in time you buy, what's the price that our pool offers. And you can see the full inventory of all the projects we have currently. And so how it works is very simple. It works through arbitrage. If the price of the pool goes too high, then suppliers will start stream selling to the pool. They can sell 10 credits, 100, 1,000, 10,000 credits. If the price of the pool goes too low, then all the brokers, traders, marketplaces can, they can buy it out from our pool and sell it to their clients at whatever prices they want, capturing the arbitrage in between. So basically, we're using arbitrage to make sure that we discover the fair market value for these forward credits. And this is deeply liquid market. This is the world's deepest forward market there is, that offers 24/7 buying and selling orders already. And we plan to do the same for other asset classes as well.
Okay, thank you. This is much clearer. Thank you, Steven.
Thank you, Guillaume. Ayana or Konstantin wants to jump in?
Yeah, no, thanks, Denver. Quick one on your kind of view of the market and a little bit on the liquidity providers as well, because obviously, the purchasing of carbon credits could create bad incentives as well for bad behaviors on the other side. So just quite curious to see how you guys think about that in the market and your product.
So the question, if I understood correctly, is that do we believe carbon credits are good, or do they incentivize companies not to reduce emissions? Was that the question?
In a way, partly, yes. And then if that is, I think some companies do that in reality. So is there a way that you guys, and if they don't yet, will they? And is there a way you guys can control for that, maybe, on the liquidity market side?
So for the
And
first
by the way,
part,
sorry to interrupt, we need a super short answer for that because time is almost up.
Okay. So the first part, you may be interested in reading Troll Research, which just recently published a report which clearly showed that every company that's buying carbon credits is actually also reducing their own emissions. So this is more like a fallacy. But even if it is real, the biggest thing it comes down to is price. And we have only Vera, Mangrove, Rarur credits. These are the most premium Vera credits you can find. It's cheaper for you to reduce your own emissions than to buy carbon credits. But yeah, no, we don't control that. We're market makers. We're not arbitrageurs of what's, we're fully open, liquid, transparent NASDAQ, if you will, where everybody can buy and sell into. So this needs to be fixed by other mechanics. We're not arbitrageurs of quality and standards and things like that.
Okay, thank you.
That makes sense.
Thanks so much, Stanford, for the presentation and the answer. And now we can move to the next pitch. Thank you again. The next company is Realize.io. Bryce will be doing the presentation. Bryce, you can share your presentation screen as a presentation.
Hi, everyone. Let me start. Yeah. So my name is Bryce. I'm a founder and CEO of Realize. What we want to do basically is to facilitate the tokenization of traditional securities and real-world assets, democratizing access to investment opportunities. And we want to become the first European stock market for digital securities. One of the issues for the wealth manager, particularly the small to medium-sized one, is they make less profit than the larger companies. Why? It's because they don't have access to very good investment. They cannot afford the high entry ticket. They have a limited access to diversification and compliance issues when they want to do cross-border investment. The problem for the asset owners is that more than 6.5 trillion is locked in illiquid assets. They have no access to fractionalization. They cannot leverage their assets very easily. And if they want to do so, the process is very complex. So what we enable is to access to vetted investment from around the world from 500 euro with high quality product using blockchain technology and top tier licenses. Our product is a platform. Sorry, my screen is going fast. Our product is a platform for the wealth manager to be able to use, browse investment, register their clients with KYC and AML process, use AI tool to improve the follow-up and personalize the dashboard and develop the portfolio of their clients to create wealth. How we generate revenues is from different streams. First is on the insurance, where we do the due diligence, the tokenization, and the market making, but also on the distribution on our marketplace, but through partners with the asset management of the underlying assets, on the token management itself, on the collateralization, and when the secondary market will start, we can do as well on the secondary market to create liquidity. We work on a Web3 idea with a large network. We want to have distributors, so we are setting up partnerships with neobanks, but also with lending platform and DeFi platforms. In France, we have no over than 50 wealth managers. So it's wealth manager and wealth manager networks to distribute our assets to their clients. We have about 300 investors registered in Germany and in Austria, and above 100 million worth of projects ready to be tokenized on our pipeline. On the market of tokenization, most of the people are focusing on their vertical, meaning either on their country or just on a certain sector of basically real estate. What we want is we want to go really in many sectors as possible to create a real marketplace and build that secondary market, which is really needed. Tokenization is not something which is going to be, it's already existing. 97% of institutional investors agree that tokenization will revolutionize asset management, and it's going to be 10% of the GDP, but it's not tomorrow. To give you an example, just as of the 12th of June, Bank of China has raised and tokenized a bond of $28 million. So it's this month. And earlier this year in Hong Kong, 500 million was tokenized. So tokenization market is large. We are focusing to start on the wealth manager because they are the network to distribute to mainstream people. Just in France, 500 billion, that's a number from the French National Bank, is locked on current assets from individuals. So there is a huge potential. Our team is composed of seasoned executives from wealth management, real estate investment, and IT sectors. We've successfully established business around the world, in Europe, in Asia. Our advisors are ready to join us in the journey. We already registered in France under registration in Luxembourg. We have representatives office in Austria and in Japan. So I'm happy to hear your question and join us and make something good together with the tokenization.
Great. Thanks so much for that. Great presentation. Ayana, what do you think? Do you have any comment or question?
Yeah, yes, thank you for the presentation, Bryce. Hope I'm pronouncing your name correctly.
Yeah, perfect.
Okay, good. Just more of a kind of two clarifying questions. Can you just share a little bit more about your distributors that you mentioned? I'm more trying to get an understanding of, like, you know, what is their profile from an AUM perspective? And then is there a rev share model with your distributors?
So yes, basically, so on the distributors, we have different layers. What we didn't want to work on ourselves. We want to be like Amazon is doing, meaning you have a marketplace, and then everyone can specialize in his vertical, in his sector. So on the distributors, some names I cannot mention yet, but two neobanks will be working with us in 2024. At the moment, they're only selling cryptos. So what they want is they want to diversify. They have already a huge portfolio of clients, but those clients want to have access to other securities which are very stable, because we focus on a real world asset. So what we tokenized is real world asset, meaning it's real estate, but it's also bonds. So the distribution we do on different levels. The independent wealth managers, so those one are our network in France, Austria, Germany, with family offices. And when I mention distributors, those are lending platforms. At the moment, we have two in Switzerland. One is called Accredius. I can share the link later on the chat with other people, because we believe everyone has his own specialty. So if we look 2 to 3 years down the road, what we want to be is a global marketplace where the people can really feel and use the liquidity provided by the tokenization. But to do so, you need to have a lot of different assets on one platform.
Got it.
A quick question on the assets, actually. Sorry.
No, please go ahead.
Thank you. You just mentioned the asset classes. Which asset classes do you currently have on the marketplace, and do you see any dominant ones emerging?
So at the moment, we have a strong focus on real estate because that's where our background is, and that's the easiest. Going back to Ayana's question about the distribution, what we do is we start from the distribution, meaning we go to the wealth manager asking them what they are willing to give to their clients. The easiest at the moment is really real estate, strong real estate. However, we find with the bonds that it's there is a big appetite for that. Why? Is on the insurance and the cost of issuing a tokenized bonds is between 40 to 90% cheaper than a normal bond. So it's one part. And another part is for VC firms to raise funds is up to 40% cheaper, and we can provide more liquidity. So if I have to put some money on betting what will be the next after real estate, is more on the bonds. The banks are already starting very aggressively with that. And as a French bank, we are currently discussing with the BPCE group because they are focusing on how they can bring their retail clients into alternative digital assets, but which are not crypto. Therefore, we're really going into that. So I see for the coming years, really on the private market part, real estate as the key part, but for the bank, because people have not waited for us. So when I mentioned the different big groups like Citi or Standard Chartered or whatever, they will focus on the obligations.
And Bryce, you just sort of touched on it, what I was going to ask, but maybe you can speak to it a bit more. I mean, what you're building is essentially a two-sided market, and there's always a challenge with balancing both sides so that you have supply and demand kind of intersecting with each other. How are you going to manage that? I mean,
yeah. So Douglas, that's something which we were asked, and actually we figure that one of our core quality is on the sourcing. So because the key challenge is to build both parts at the same time, like you mentioned, supply and demand. So we started with the demand because we're coming from real estate investment, and we had demand from investors who wanted to come with us. So this demand now is created, and the question of the supply is we are focusing on assets which will be recurrent. I'm not sure if it's the proper English word to say that, but we work with real estate developers or big asset owners who are giving us assets by tranches. If I take one in Japan, at the moment he has 100 million euro worth of portfolio, is giving us 5 million to start to see how it goes. So that's something which is recurrent, and we are doing the same also in Germany. This is a strategy, but it's also because of our size. We need to grow gradually, and we want to deliver quality. However, we will be very opportunistic. If tomorrow there is someone from the demand who is looking for certain kind of bonds or other things, we can do it. Yesterday, I had a very interesting meeting on something totally different, where we need to work on the tokenization of ships doing internet, the one who puts internet lines into the ocean. So they want to tokenize it to bring some people investing into it. So yeah, but it will be challenging for sure. Otherwise, there is no fun.
Thank you, Bryce. If we have just a second, maybe a quick question regarding the wealth managers, Bryce.
Yeah.
Is there an intent with the solution that the wealth manager can have a view, let's say, on the overall portfolio of its own client?
Exactly. Yeah. Guillaume, that's really what we want to add. Now we partner with an AI company which is enabling our dashboard to do so. We want to help them to use the platform. Basically, the wealth manager will have many clients, and they will create the risk appetite for each client, which kind of type of investment they are doing. That's one part. But then on all those investments, that will generate some revenues. So we want to give them some ideas how to use those revenues. And that's also a discussion we had, because one of our team members is wealth manager, and we developed, maybe you know the company Fondimo, also in France, which is a large crowdfunding company. So they will also distribute, to go back to Ayana's question, they will distribute also our projects, the one which are compatible, but we need to have added value to the wealth manager. Like that, they can use the platform and they can stay on it and reuse it, because that was one of their demands. They have a lot of their clients which are investing into real estate, but it's a one shot. So for them, the advantage is to have recurrent revenues with their clients.
Yeah. Thanks so much, Bryce. Thanks for the contribution of the judges. Now we will move to the next page. See you guys. So the next company is Nude. Crawford Tyler, CEO of the company, will do the presentation, and his colleague Antonio from the management team. Crawford, are you there? Feel free to share your screen, start a presentation when you're ready.
Yeah. Hopefully everyone can hear me okay, yes?
Yes.
Fantastic. I'll just share my screen. I'm Crawford, CEO and founder of Nude. Let me just share my screen. Hopefully everyone can see that, yes?
Perfect.
Perfect, great, thank you. Thanks for the feedback as well. Nude's vision is to automate the financial system, making it easier and enabling people to take control of their finances. And that is what we have built at Nude. We're a tech company using behavioral science to motivate and engage, and AI to automate. AI is about to change the world in so many ways, and Nude's leading the way with an automated best friend that's really good with money, helping customers 24/7. Our brand is more lifestyle than fintech. We're live. Metrics are incredible. We've got an outstanding team. Our financial model is revenue generating, not acquiring customers at all costs. And we're looking to raise 7 million of equity investment to achieve our next milestone of 4 million ARR and continue in our mission to transform the financial system. A bit about me, previously a consulting actuary to some of the largest defined benefit pension funds in the UK. I set up a goal-based approach using technology to pull information together in a framework for better decision making. And it transformed the pension funding of over 7 and 8 pension schemes and securing the benefits of scheme members. And I've taken that approach to the wider audience. I care about the world around us. I also have 3 kids and I can see the challenges they face. So I want to do something meaningful. Started Nude, similar goal-based approach, strong values, non-judgmental, we're transparent, we care about the world around us, and it's fair. The financial system isn't working for the majority. Unless you can pay for financial advice, it's fragmented, it's opaque, and it's complex. And what we have done at Nude is we've pulled all that fragmentation together into one beautiful app that helps customers using artificial intelligence and behavioral science across 4 key areas. 1, you set a clear goal for what you want to achieve. You want to retire comfortably, how long it's going to take, and when we motivate and engage. Content and community, accounts, both cash and stocks and shares, and then provide ideas to supercharge customers to achieve that goal earlier. Our first vertical is home ownership, where we set a clear goal for somebody. Where do you want to live? What type of home do you want? We're linked in with HMRC property prices. We use time for that engagement, the education and empowerment. What's a mortgage? What's interest rates? We provide it at the right time for individuals, not to overwhelm them. We've got a cash Lisa and a cash investment account with BlackRock, an ESG fund living up to our values. Then ideas to supercharge. Metrics are incredible. I said we're launched. Average age of our customers 23. 70% female, very valuable, saving over £300 per month with us. They're engaging over 8 sessions a month, paying customers, and we're acquiring them unbelievably cheaply. Others acquire in similar areas over £400 to acquire, £500 to acquire a customer. We're acquiring them for under £20, and we're generating revenue 6 months payback period, and that average revenue per customer is increasing. No point in acquiring customers unless you can retain them. 74% retention, really high retention after 24 months. That's not all. These ideas are just incredible. We're linked in using open banking to customers' bank accounts. Customers can ask questions about their money, how much to spend in energy in the last 6 months, how to achieve my goal in 2 years quicker. And we also be proactive because people might not realize the right questions they can ask. and we can help in that. And what's really differentiating as well, we can execute on customers' demands, we can move customers' monies as well. Why do we think the metrics are so incredible? We've got a brand that resonates with our target audience. We're solving the underlying product problem. It's not a product. You look at any bank or building site, it's products. We solve the underlying problem, and the product is easy and engaging. Over 60% of our customers come from organic growth, some word of mouth. We've also got viral features, team up with the person you're doing the goal with. Gift time, you can share your goal with your friends and family. They can contribute towards your goal as well. The market opportunity is huge. Over 10 million people in the UK aspire to own a home. Over 22 million people currently saving for retirement, and then overseas expansion as well. Our revenue model is we charge a membership fee. We also make a net interest margin on customer deposits, and we're just launching partnership revenue model whereby we help somebody get a mortgage and we get a referral fee for that as well. We're looking to raise 7 million. We're ready to scale. We've got a regulatory permission.
Crawford, so sorry to interrupt. Could you please speed up a bit because actually we're out of time right now. Could you please speed up a bit? I'm sorry about that.
That's it, finished, and that's the team that's delivering. Okay.
We can.
Thank you.
Thanks, Crawford. I don't know, maybe I'll start off. What do you see as, you know, your main differentiator versus other platforms like Plum, or, you know, then on the digital wealth side you have Nutmeg, you know, the US Wealth Fund. What do you see as the edge when you compete against for customers against those guys?
Yeah, I mean, as I say, Nutmeg, I know from sources that the cost of acquisition is over £400, and we are under £20. And the key differentiator is we're focused on underlying problem. We're not selling an investment platform that you go in thinking, what do I invest in? We're solving a problem of what do I want to achieve? I want to retire comfortably. I want to save for my children. How do I do it? I want my first home. And then what we do is pull everything together to help customers achieve that goal.
Hey, Crawford, just adding on top of Constantine's question, one solid presentation, and it seems like you have some solid KPIs behind you. Kind of leaning into that a bit more, I saw that you have, if I'm quoting correctly, almost 400,000 registered users and a little over 9K paid. I was wondering if you can speak a little bit more on, you know, what you plan to do to get more of those registers converted to paid customers.
Yeah, good question. The conversion is now about 8% conversion from top of funnel to bottom of funnel. So we've increased the conversion. We've got lots more to do to increase that further, making the free plan offering even more engaging, potentially opening it up to some of the ideas to really engage them and realize that they can save money with us as well. And we engage those through life cycle marketing. So we've, in essence, got a database of 400,000 customers we can convert over time, which they do convert. We've spoken to a number of them. They're just either not ready to save it just now, or they just want to do a bit more research.
Thank you.
Crawford, are your clients, when they have a savings goal in mind or a purchase goal in mind, are the funds just being held in interest-bearing deposits, or are there other investment options that are, you know, maybe through a robo-advisor selected based on the time frame and their contributions and the amount of money that they will need at that future date?
Yeah, Douglas. We've kept it simple to begin with, minimal viable product to launch. We've got a cash account where we place the money with a third-party bank. We get an interest rate and pass an interest rate on to our customers, and we make a net interest margin. So we're making about 50-60 bips from that just now on cash. And in the stocks and shares, we've kept it simple as well. BlackRock's, MyMap 5, ESG fund, living up to our values of caring about the world around us. But the future, you're quite right, will be expanding that offering for different goals. Retirement savings, very focused on equity orientation, as an example. My background is a consulting, actually. Money purchase pension schemes are defined contribution pension schemes that trustees ran. We live in the world of complexity, but most ordinary people, 95% plus, just choose the standard fund that's offered by the trustees of the pension funds. And we live in the world of the 5% complexity. In a way, we're going for the 95%.
Crawford, I have a question. What geographical areas are you going to support for first-time home buyers?
Sorry, can you repeat that question again?
What geographies are you supporting for the first-time home buyers? What is your target market in terms of where you're going to give them the opportunity based on your application?
Our target market just now is the UK with views for overseas expansion, possibly into the US first, because we've got a good few contacts there. We'll probably expand into different savings goals first before going overseas. We are that close in a way to start thinking about retirement. Retirement savings is where I come from. And a lot of our customers are saving up for their first home and have actually bought their first home are asking us, can we use your platform for saving for retirement? So that just setting that goal for retirement savings. So yeah, hopefully that answered the question.
Yeah, thank you, Rajiv. Thank you, Crawford. Renee, do you have any question or comment?
Perhaps a bit on the unit economics, Crawford. So you have a very low CAC from what it seems, which is always great to see. But aside from the organic growth, like what other distribution model do you have in place? And then, sorry if I missed this from the slide, but the 70% retention, over what period of time was that based on?
Yeah, let me do the retention. The retention was 74% after 24 months, 2 years. And in terms of distribution channels, we've got affiliate partnerships we're exploring as well. We've got a few of them live. I would love to go into B2B Nude for employers. We've tested our toes in the water and it's getting good reception there. Imagine not just an employer offering life assurance and a retirement pension for their employees. Imagine a platform like Nude helping young people or all employees save for a car, a wedding, retirement savings, first home, second home, etc., offering ISAs, LISAs, general accounts, stocks and shares and cash. That is something I'd like to go into as well.
Thanks so much, Renee. Guillaume, do you have any question, comments? We are very about to run out.
No specific new question. I was more also discussing unit economics, of course, that you just did, Crawford, and then I was also in line with Ayana regarding the USP of Nude. So not much new.
Yeah, got it. Thank you. So yeah, time is up actually. Thanks so much, Crawford, for the great presentation.
Thank you.
Now we can move to the next page then. Crawford. So and the next company is Lerex. Richard Sney, CEO of the company, will do the presentation. I guess there's a bit delay in the conversation from my side. I'm sorry about that for the inconvenience if it's very obvious. Richard, are you there?
I am here. Yes. Hi. Can you hear me?
Yes.
Good. Hi, everyone. So I'm Richard. I'm CEO for Lerex Technology. We want to become the home of embedded finance for the SME market. So if we look at the effort it takes today to bring a new financial product to market, we see that it will take a minimum of 3 months and 100K. What Lerex is doing is we're shortening that process into 4 weeks and 10 grand. I think considering the audience, I don't have to explain why people might want to access financial services. There is a number of reasons behind that, from cost, revenue generation, customer retention, operational efficiencies. So what we're seeing is we're seeing a number of businesses that are non-financial businesses trying to access those financial services for providing to their customer. Whilst it's fairly accessible for some of them, we see a number of businesses for which it's nearly impossible. And I'm talking about the small and mid-sized businesses. So due to the cost, the complexity, and the number of barriers, there are a lot of small and mid-sized businesses that would like to deliver those products and simply can't do that. And that's where we fit in. So as a business, we already take the full problem away for the customer. So we deliver a full embedded finance solution, banking as a service, whichever way you want to call it, in a fully managed service. So we are going to provide the full technology stack. We're going to provide the full operational model, answer all the compliance questions, all the regulatory burden. All of that we take away into one point of contact, one contract. It all becomes our problem, and our customer can focus on really pushing the services to their end users. Obviously, we're operating in a very large growing market. We're only going to acquire a tiny fraction of that. And at the moment, we're focusing on two verticals, which we're the strongest at, which is FX travel and SME account solution. We've put together a strong team, both on the executive team and advisory board. So we have advisors like Mike Chambers, who's been previously CEO of Chaps, Bax, Faster Payments. People like Kriya Patel, who's been in the e-money institution industry for a number of years. People like Roberto Rivero, who've been head of sales and marketing for the London Stock Exchange, and others like Alan Whiteley, Dougley. So we have a good advisory team, currently supported by high net worth individuals. We have a number of indirect competitors. I know some of you guys would recognize the name, especially people like Modular. We don't directly compete with them, but we see them as indirect competition. However, there are a couple of people like Weaver and Tokyo that are extremely close to us, and we're keeping a very, very close eye on. The reason why customer would come to Lerex versus those other players is for speed to market, total cost of ownership. We are not cheap, but because we cover a lot more of the scope, the total delivery of the solution is cheaper. Our compliance approach is very pragmatic and open and educational, which our customer like. And generally speaking, we have a stronger feature set than our competition. To date, so we've been going on for 3 years. To date, we've signed 22 customers. We've doubled ARR or more every year. And we've managed to secure strong relationship with people like MasterCard, who are helping us a lot. Our focus for this year is to continue doing that, focus really on the two verticals that I was explaining, FX travel and SME account solution. We want to double ARR on customer again. And we want to apply for our own EMI, e-money institution license, so to be directly regulated by the FCA. We're well on the way to raise 10 million to be spent on sales and marketing. To date, everything has been word of mouth, so we want to make a bit more of a splash and go on the market a bit more. We want to spend some money on keeping the product ahead of the competition, and there is a number of new verticals that we're looking at. And also some of the raise to contribute to that EMI application, to that FCA license. Generally speaking, our product is well received. Just few testimonials from our customer here, and there are more than that, but our customer is usually very happy with our approach, with the service. We are transparent. We are trying to really build a great reputation within the space, and that's why we've been able to grow to where we are today. As a conclusion, I think we see a lot of players trying to be the next FinTech, trying to be the next Revolut within whatever sector they're at. What we're really focusing on is giving them the piping and the underlying platform for them to do that. So we are currently going through a FinTech gold rush, and we believe Lerex has the best shovel to sell. Thank you.
Great, thank you, Richard. Anna, would you like to start with your comments?
We can't hear you, sorry.
I think you can unmute yourself now. Okay, sorry about that, Anna.
Thank you. Thank you, Richard, for the presentation. I do have two questions. Maybe I'll just ask one. If you can provide a bit more insights around why you're starting with focus on FX travel, and if I heard you correctly, SMB account solutions. I think I didn't walk away from your presentation with the aha moment there. So yeah, if you could answer that question, that'd be great.
Sure. So as a business, when we entered the market, it was important for us to demonstrate that we could cover a large number of use cases, especially as an embedded finance provider. We want to make sure that we are covering a number of different propositions. So today, across our 22 customers, we have a wide range of services. So we are also quite proud to be one of the first, not the first, but one of the first player to have convinced MasterCard to deliver a cryptocurrency card. So we have cryptocurrency, we have buy now, pay later, we have corporate expense card. We'll continue doing that as an inbound strategy, but as an outbound strategy, we want to be a bit more focused on two verticals. And we picked the two verticals where we felt we were stronger, where the ROI was better, the proposition was better, and where we got the most traction. And that's where those two verticals are coming from. Obviously, there is also market size to be considered, and crossing all of that, we're going to focus on those two verticals.
Okay. I know I was going to ask one, but I just have one more. So I see you're raising 10 million. What would the business look like with a little less than that, given we're in a tough fundraising environment?
So depending on what angle you're taking, we are extremely supportive investors. So we do believe we're pretty close to closing the 10. I think if we were to close less than that, we'd just go a bit less rapidly. So it's sort of a question of how quickly we want to deliver some of our projects.
Okay, awesome. Thank you.
Thank you, Anna. Do you have any question, comment?
Yes, thank you. Thank you so much, Richard. I was also asking about the funding, so in accordance with Diana, so thank you for your answer. Regarding the use cases, sorry, I had to jump for a quick second, so I'm not sure to understand what kind of services and the verticals of customers you have today.
Sure. I mean, the use cases are quite broad, but if I focus on the two verticals I mentioned, what we see is, I mean, one of the obvious use cases, if you want to be the next neobank, you sign a contract and we deliver that to you, within weeks, right? And you don't have anything to do but pushing your website effectively. But within the two verticals, we see a lot of travel agents wanting an FX travel card. So as they're in the process of selling holidays, they get frustrated that their customer use something like Revolut and Monzo. When they're abroad, they want to start capturing that FX feed, and they want a travel card to also sell to their customer. Very often there are very specific products on the market, but they're in a situation where they want something slightly tailored to them to have a competitive advantage. That's one of the use cases. We would deliver an FX travel card tailored to what the travel agent wants, for them to push their customer. In the SME account space, we see a lot of businesses that are dependent on their customer having a bank account. So a lot of the acquirers, when they're trying to sell their point of sale solution, are struggling because their customers themselves can't open a bank account because the district bank have completely disengaged. And therefore, those acquirers are starting to kind of want to bundle in a solution where they say, as part of the package, we're giving you the point of sales, but we're also giving you a digital account for you to settle in, maybe a corporate expense card for you to start paying expenses from your business. That grows into the consultancy firm, the company formation firm, all those kind of businesses that rely on people or on other businesses being able to open bank accounts. We also see payroll automation companies. So one of our large customers is doing payroll automation, for example, through us. So the use case is quite large, but we are focusing on the few that I've mentioned.
Okay, thank you very much, Richard.
For Richard, for the customers you work with, and I don't know whether you want to divide this by use case or by customer, I'll leave it up to you, but what sort of integrations are required and how is that scalable across different customers? Like for each different customer, do you need a bunch of new integrations or does it fit across all?
So I think that's one of our USP that we already take all of that. So typically speaking, so we have two ways of integrating. We have a white label that we can deploy within a matter of minutes. It's roughly 50-50, 50% of our customer base use the white label product, and then we just push as their customer. Then we have another 50% that would choose to build their own effectively mobile app most of the time on the back of our API. And on that piece of work, they would build it. We've just released an open source version of that, of a version of our front end that allows to accelerate the integration. And so it is 50-50 either white label or API. But to answer your question, no, we don't require any different integration based on the use case.
Yeah, thank you, Renee, for the question. Konstantin or Douglas, would you like to jump in?
Just a quick question on, curious, you in the States, we've got like Plaid and Veeam. I don't know if you you kind of compete against them. I'm kind of curious. You had the competitive slide, but maybe very briefly describe what your secret sauce is or your unfair competitive advantage, because it is a busy space, payment rails and international payment transfers. So what do you do differently or better?
Yeah, so there's a number of things we do differently. So very few providers take away the compliance regulatory burden. So if I go into, there's loads of them, but if I go into, Modular, Railsar, and all those guys, they still require element of compliance within their customer base, right? So they won't necessarily take that whole piece away. We do. Then in the people like that do take that piece away, they tend to deliver a very, very strict product. So the flexibility isn't there anymore. What we do is we bring back the two together. So we already deliver the full value of a product, but with the, I wouldn't say the flexibility of a service, probably going a bit too far, but with a lot more flexibility than you would have in a product suite. So that allows our customers to end up with a product which can compete because they've customized it, whilst retaining the advantage of speed to market and simplicity of a fully managed solution. I'm sure some people I mentioned like Tokyo is clearly answering that market. I think a lot of those players also focus on much larger organization. Our niche today is really the SME market, and that's where we've been very, very strong. We're getting slowly pushed into addressing FTSE 250 type customers, but our niche is really kind of addressing the SME market that don't necessarily have the expertise, bandwidth, capacity, or financial legs to go to some of the people I've mentioned.
Yeah, thanks so much, Richard. Thank you for the question and contribution from all the judges. And let's move to the next page. Thank you, Richard. So the next company is T.I.M.E, the insurance market exchange. Michele Marzola, the late investor, will present the opportunity. Feel free to share your screen and start the presentation.
Right. So thank you for giving us the opportunity to present T.I.M.E today. As introduced, I'm the lead investor, and I'm fortunate to work with two very experienced leaders in the insurance industry, Giorgio Dampieri and Giorgio Dupini, who are also participating in this conversation. Let me see if I can finally share the screen. Yep. Okay. Right. So what you will see is something that already exists and is actually used in Italy by both channels and insurance companies. What we are trying to do is to give a new perspective of recentering the view on insurance for both clients, channels, and insurance companies. Our platform is aimed at serving the vast majority of the brokers and agents in the Italian market, and it is actually applicable in many other European markets. We are essentially integrating the currently scattered and fragmented way of dealing with customers that different brokers have in order to manage various policies issued by different insurance companies. This is normally a great headache for the customers. It is very unproductive for the brokers and agents and leaves also the insurance company puzzled about the potential cross-fertilization opportunities. So what we have done is to create a platform that gives the customer-centric perspective on customers. And let's see, this can advance. And basically, it gives to the customer all the views on all their policies with the possibility of having a prompting of new potential services that will complement what they've already got, and a reminder about potential renewals. Intermediaries, in turn, also have the full view of the customer situation one by one, and this permits to have good prompting of new potential leads. We have a clear track record in Italy, where we have already issued about 273,000 policies with 78,000 contracts managed for the total contract value of 27 million, and we have assessed and quoted about 4 million risks, generating 3.4 million in fees. Our plan is to develop further, add many more companies and products to the current existing platform, reaching more than 500 entities, serving 800 more intermediaries with the capability of managing almost 1 million contracts. Most importantly, we are also creating a database which today is a 1.2 million record. We plan to get all of them GDPR compliant, and this will require a downsizing next year, but then we will grow it back to more than 3 million of contacts, which will be fully GDPR compliant, creating an excellent platform for marketing activities. Our economics aim at generating 17 million in fees by 2028, essentially boosted by data, which is the platform I've just described, which will be the most important part. We are strongly supported also in the affinity channel, for example, with the partnership we have with Altro Consumo, one of the most important consumer associations in Europe. We're proposing an investment round of 3 million in straight equity. We plan to close it by September 2023. The funds will be deployed essentially on commercial expansion and in starting to test the potential application outside Italy. We are aiming at an exit through a trade sale within 3 to 5 years with a multiple which is likely to be more than 5 times. Ready for your questions.
Great. Thanks so much for the great presentation. Konstantin, what do you think? Do you have to start?
Yeah, thanks, Michele. My first question is on the business model side, who pays you guys? Is it the brokers? Is it the insurers? Who's the sort of?
It is essentially the broker or the agent which pays a very small pay-per-use fee on either the number of companies enrolled, something like 12 euros per month, and a very small amount for every policy or every risk assessed, which is about 10 cents per quote. So at the end of the day, we are offering an economic model that will indicate potential cost for the broker dealer and the agent, which will be less than 4% of their revenues.
Right, that's helpful. So you're almost acting like a marketplace between the insurer and...
It is. I didn't want to use marketplace as a word because of the hyperinflation on the word, but yes, it is.
Helpful.
Maybe a quick question, Mikhail. Thank you for the presentation. Regarding your clients that are the, let's say, insurers and then also the intermediaries, what kind of integration do you need to perform to be live with them?
Well, essentially, we see is what we have already done on car insurance, on life insurance, on different products. So we're expanding the type of risks that we are able to integrate and where we are offering compliant private view for the different policies across the different companies. And this is already happening. We have just to expand the type of risks that will be actually assessed through this marketplace.
Could you please help me understand how the current process works? And perhaps if you have any data on, what sort of time you save. The reason I'm asking is because, and correct me if I'm wrong, but there seems to be quite a behavioral aspect to this as well. And you're asking people, your customers to change the way they purchase. So yeah, want to understand your thinking around it and what it currently is that you're replacing.
Well, we have a large number of intermediaries and clients already. We are not actually asking them to change their behavior. We are offering them what they really like and facilitating their full understanding of the risks they are covered for. So we are not changing so much of the sales process. We are giving a more powerful tool to both intermediaries and clients in order to be more cognizant and more effective in developing their activities.
Sorry, maybe I misunderstood this from your presentation, but the end client of the insurance can purchase from you as well, or that's completely separate? This is just between the brokers and the insurers? No.
It is the purchase comes from the broker with the product line that they have. It is a way of enabling the customer to have a better visibility on what they've got and what they haven't got, so that the channel can actually prompt the most appropriate coverage to that customer. One of the secret sauce is to keep the full visibility whilst not breaching any confidentiality barrier. And this is what we have resolved with our platform in place already.
Right. And then, so for example, if one of the brokers were to need a matching policy for one of their customers, because what happens very often is that underwriting happens differently for every single policy. Like there'll always be some terms and conditions that change. So, and a lot of the underwriters don't want to make that effort if they're not pretty sure that the broker is going to purchase or their customer is going to purchase the policy. So how do you ensure that type of trust in the marketplace?
Well, essentially the brokers will have the visibility of the risks of the client participating in T.I.M.E. So they will know the condition and they can provide a better quote for that type of risk. And this will enhance both the transparency and the efficiency of the Italian insurance market.
Yeah, thank you, Rennie. Anyone else? Diana or Douglas?
Douglas, do you want to go first?
No, go ahead. Go ahead.
We can go.
Cool. Yeah, I have more of a question around your revenue projections. I'm just curious to understand, like, what has to kind of go as planned for you to hit those targets year over year.
Well, it is part of the metrics. I don't dare going back to share the screen. But basically, this is based on the experience we have already got in the number of new brokers and agents that we can recruit, that we can motivate and train. The number of customers comes in a much easier way also because we are propelled by Altro Consumo, the largest consumer associations. So these are relatively, I wouldn't say conservative because I never do conservative plans, but doable plans for reaching that level of revenue, which is still relatively minor. 16.5 million in revenues in the Italian market is a medium broker. It is nothing peculiar, but if we have the right multiple for both our revenues and EBITDA, that will justify the 5-time or 10-time return on the proposed investment.
Gotcha. Thank you.
Great. Yeah, thanks so much. Thank you for the great answer, Michele. Now we will move to the next page and the final pinch. Thank you, Michele, again.
Thank you.
Thank you. And the next company is Stonestep. Brandon Matthews, CEO of the company, will do the presentation. Brandon, feel free to share your screen and start your presentation when you are ready.
Hi, everyone. So I'm Brandon. It's at the other end of the insurance spectrum. I'm going to speak about emerging markets, mass consumer, very small policies, very much automated. So venture capital has poured billions into insurtech over recent years, and we see this as an advertisement for our solution. Technology makes insurance faster, but not cheaper and better. We're removing real costs from insurance with a novel business model so everyone can access the protection they need. There we go. So Daniel and I know this industry and our markets, as do our team. I established mass market divisions for AIG and Zurich, mainly in Latin America, growing each of them to about 20 million policies, $1 billion in annual revenue premiums. Daniel ran Zurich's consumer business in Asia, and unusual for a senior underwriter, has computer science degrees from MIT and ETH. Our product is B2B infrastructure for fast flow insurance, microinsurance, if you will. The business model is based on the only embedded financial product that has truly reached scale. So just like consumer credit and payments, we start at the point of sale at the B2C company, the bank, the e-tailer, even the cooperative or microfinance institution, and work backwards to unlock capital providers, insurers. We established the insurance equivalent of a credit bureau with contributory data to price risk. Our go-to-market is our secret sauce. I don't want to go into it too much on this call. Our straightforward economics are highly defensible. Last year, our platform processed 29 million policies, and we're set to just about double it this year. This is enterprise middleware for many-to-many, high-volume, small-ticket insurance. We're able to turn a profit on policies that cost pennies per month. Ultimately, our main objective is data. That's the key ingredients to price risk. We're building long-term advantage with better understanding of risk, retention, adverse selection, and moral hazard, serving growth markets where insurance data is notoriously sparse. As a B2B platform, not an intermediary, we offer credit card economics. Insurers pay as a merchant would for the policies they sell, a very small percentage, and the B2C channels effectively borrow our services and pay revenue share until we make it back. The addressable market is vast, and we have the traction and pipeline to start capturing it. Swiss Re calculates 800 billion of absolutely critical premiums are missing from emerging markets a day. That's almost the same size as what is currently written in emerging markets. This is truly accessible. Setting up a reinsurer in Mauritius, for example, which is perfect for serving a number of markets, requires $200,000 of capital. And setting up captives in the Channel Islands is, tens of thousands of dollars. So with the data, that is a future direction. With our current clients and pipeline, we project 5 million in fees within 2 or 3 years. That's just for the software and data services. And that component has extremely high operational leverage. Last but not least, and I appreciated an earlier presenter talking a bit about the need for caring about what you do. We care deeply about impact. Lack of insurance is a cause of 2/3 of poverty and a major constraint to every development goal. Our reputation and objectives allow us to also secure reliable support from public sector organizations, de-risking our work in less developed markets. In conclusion, our objective is to unlock insurance for everyone. We have the team, the technology, traction, and the business model to make it happen. I'll be glad for your questions.
Hey, Brandon, do you sell to large carriers, or is this market better addressed by like MGAs?
Really interesting question. So we're selling directly into mobile wallets, mobile operators, banks, into the channels that have the customers. So insurers are the manufacturers in this process. They are, we could call them demand aggregators or distributors. The companies that want typically either margin to boost their unit margin, or they want retention. And in particular in emerging markets, it's the retention aspect that's most appealing.
So it's a bit of like an embedded insurance, enabling embedded insurance.
Correct.
Do you see the company moving in and providing insurance yourself? I mean, I would just think the amount of data that you will collect, you'll have an unfair advantage in that regard. Yeah,
I mean, somewhere down the line. Right now, so I think that's going to be an interesting play as we have enough, when we have enough data and we have the software in the distribution channel. Do we want to be there, or do we prefer to let the market price risk? I see that coming down the line in the future. Certainly being on the capital side in one regard or another. Another aspect would be premium financing, so that people can have an annual policy that they pay in daily amounts or monthly amounts. That's another capital play that we could see in the future.
Thank you.
Can I just build on top of this? Thanks for the presentation, Brandon. So kind of with regard to what you just said, what is your true SOM? Because I took the 5 million as, if I heard you correctly, as more of your 2 to 3 year rev target versus what you could achieve in, I don't know, 5 to 10 years. So what's the real number there?
I don't know how to answer that. I mean, I could see this going, to the moon, and replacing how insurance is sold in a lot of markets. I think that is hopeful, entrepreneurial, wishful thinking. So I feel comfortable with the pipeline that we have and the partners that we're working with. One of them is the number 10 largest insurer in the world. We provide them the software, but through them are working directly with some of the largest e-tailers in Asia. It's a bit hard to say exactly how big it can be, how fast, but this is a different model than the current intermediary model, which is very high cost. And so I see a lot of room for this, in particular in less well-traveled markets.
Got it.
I have a question on the data piece you mentioned in the deck. What type of data does that refer to exactly? And is that your data thereafter to keep, or would that still be your customers?
Yes. Yeah, I love it. So that sort of fits with the go-to-market, is that we are structuring it so that it is our data to use. We are not taking customer data names, because that's obviously very sensitive to the distribution channels. They own their customers. We own insurance data. So think what LexisNexis or Experian do for insurance markets, basically only in the UK and the US, where you can ping the database to check whether there are multiple claims being made, for example, with life insurance, other types of fraud. That's one use of the data. The other use is figuring out probably the thorniest problem in insurance, which is retention ratios. Customer acquisition cost is what it is, and the longer you keep a customer, the better. And particularly if you're the distribution channel, if you're the insurer, you can't claim if you're dead. So or if you've stopped paying your policy. So they're a little bit less exercised about retention ratios than distribution channels. So that is an area of data that we're very keen to pick up in order to improve.
Thank you, Rennie. Guillaume or Constantin, do you have any comment or question?
I was just curious if it's agnostic towards kind of insurance product lines, or how you guys think about that.
Great, yeah. We do everything from, yes, it is agnostic, life, general, parametric, done them all, from travel to purchase protection to life insurance to hospital cash, flood insurance. It's really how to break the risk into small units and transact efficiently with end customers through channels.
Got it. Thanks.
And
Are you
Guillaume?
raising, Brandon? I'm sorry to cut you off. I was curious if you're raising, and if so, how much?
Yeah, raising. It's we need 3 million in OpEx, and then I want to talk about talk separately again in the go-to-market and acquisition costs, how we're doing that, because that's a separate part of the raise.
On the same topic, I was wondering what kind of raise you did in the past and who were the players helping you?
Yep. So we raised previously from XL Innovate, which was it's a part now of AXA, but the fund was actually shut down. And when we pivoted from the intermediary model to this enabler or infrastructure model, we were able to buy back the shares. So we are currently we benefited from their investment in the technology, but due to their circumstances, we were able to buy the shares back.
Yeah, thank you, Jim.
Thank you.
Anyone else? Any further question? We're about to run out of time, but we can still have maybe a short question or maybe final words from Brandon before we finish up.
Yeah, just a quick question on the markets that you're going after. How, I don't know how to ask it, so I'll just be blunt. Like, how well versed are they in insurance, right? So they truly understand in insurance and the need for insurance and the benefit for insurance, and are therefore, you know, seeking out solutions for risk mitigation.
So, great question. People don't understand insurance. I don't think people here in, I'm based in Switzerland. I don't think people fully understand insurance here. They trust it. What the people in the markets that we're serving, from Philippines to Nepal to Indonesia, they understand risk, and they understand the need to lay off that risk to someone else. So this is where the need for the distribution channel, for the company that they trust to vet the product, get the price, and effectively bond the performance of the insurance to the end consumer is so critical, because for that end consumer, an insurance company seems awfully far away, but the mobile wallet that they use every day seems very close by, and they understand it and they trust them. So yeah, we don't need to explain insurance in its entirety in order for people to want to buy the products.
Yeah, great. Thank you. Thanks so much, Brandon, for the presentation and answering all the questions properly, clearly. Yeah, this is it for today. I want to thank all the people in the audience, all the presenting companies, the judges, Douglas, Rennie, Guillaume, Anna, Konstantin. Thanks so much for your contribution, and for the investor in the audience. Thanks so much for staying with us until the end. And hope to see you at our future events. See you all later. Okay.
A pleasure.